What's up, investors? We're back. It's earnings season. This time, we're going to take a look at one of the world's largest companies, Apple Incorporated. All right, here we go. Apple just reported their quarterly numbers today. This is Q2 for them. And what I love about Apple is you could dig through the 10Q and the 10K, but they put out these like really basic financial documents. You'd almost expect this from like the mom and pop restaurant up the street, not the world's largest company. So something really, really pure about these. And so let's dive right in. So here we go. We got these figures are in millions. So we got to add a couple zeros here. This is for 3 months ended, and this is for 6 months ended. So it gives you kind of a dual view here. So you can kind of look at it maybe in a shorter time frame, and you can kind of look at it, stretch it back over into maybe what is usually considered like a fourth quarter. It's Apple's first quarter that covers kind of that holiday season. So products, this includes iPhone, the Macintosh computer, the iPad, those types of things. I think even the AirPods and all the like hard goods that Apple sells. We're at 45, call it $45 billion. Notice this is a slight tick down from the previous year. So could be virus related, could be just, oversaturation in terms of, everybody has an iPhone that wants one already, and fewer people are upgrading as quickly as maybe they used to several years ago. If you stretch it back out into a 6-month time frame, it gives you, this idea that, product sales are still growing. Maybe in the near term, it might be more virus related, or this is almost flat. And obviously you'd love to see these numbers accelerate or go up, but in terms of where Apple is, in terms of their product, the computer, the cell phone, and those types of things, it's a very, very mature market at this point. Services, this is things that are not hard goods. This is like their streaming TV product, Apple Music, their iCloud service. So anything that is not necessarily a hard piece of plastic per se, but this is like software, so to speak. You can see this is actually growing at a very healthy clip here. This is 11 billion, and this is up almost $2 billion in 3 months. That's accelerating very nicely. Here it is from a 6-month view as well. Looks like we're actually accelerating very nicely here. Total net sales, so this is combined. Again, we saw a slight decline here, but we saw an acceleration here. So we see a very small gain in these net sales here. Cost of sales, this is what's really interesting. So here's the products. Again, that's like the plastic goods, like the cell phone. Look at the cost of goods. It's 31 billion compared to $44 billion in sales. Look at the service. Look at the margins on this service business. You got 13 billion in sales on only, put only in parentheses here, $4.6 billion in terms of cost running that business. So that's what has investors very excited about this company is, look, the iPhone, the iPad, the Macintosh computer, these are great devices. A lot of us, you might be using one right now to watch this video, but the margins are great. But even better than that are the services. The service revenue is growing. It's growing faster than the iPhone revenue, and the margins are even better than the iPhone and iPad and the Macintosh revenue. So it's awesome. Here we go, kind of a total like blended cost of goods, and then we get kind of a gross margin. I'd like to see them chop this out, have the little percentage and things like that. You could pull out a calculator. It might be maybe later in this document, but it'd be nice if it was here. It is not, but nevertheless, pretty nice. Some operating expenses, real clean here. Some research and development. Again, we're seeing Apple. It's no surprise that they're reinvesting month after month, quarter after quarter in research and development. They're developing new phones, new computers, new features on those devices as well. Selling, general, and administratives kind of all lumped into one, and it is staying relatively constant here. Obviously, as sales go up, as these numbers go up, you need more support, more stuff on the back end, and so that's kind of where that's coming from. total operating expenses, you can combo that with the total cost of goods, and then you got a total net sales. We come down here with operating income, some other income here, whatever that's from, and you get down to this net income, which is a GAAP figure, which is by the book financials, which is I've done some Tesla videos and Facebook videos. They've got adjusted numbers. Apple's not adjusting for anything here. They're just showing you the straight up net income here. As we saw, it actually declined quarter over quarter, excuse me. And then 6 month over 6 month period, we do see a relatively small increase there. Now, here's the key point is we saw a decrease. Again, this is quarter over quarter here, 3 month over 3 month. We saw a decline here in terms of net income, but notice that earnings per share ticked up. So that should tell you, if you've been following my videos or if you're astute at your financial makeup, is that means the share count is declining. And so you see that here. You see that here. Notice that the share count was higher 3 months ago than it is now. That signals to you that Apple is buying back shares. So while net income is declining, this earnings per share number is actually increasing because I think it's the denominator is going down. And so while this is going down, so is this. And so it's allowing this number to increase. So it is, some people accuse management and stuff, you got declining earnings. So one way to keep EPS high is to lower the share count. And so that, I'm not saying that's what Apple is doing. I'm just saying it's a result of the buyback. Here we go. We got a net sales by channel. This is interesting because as we know, in the last quarter, the last 3 months, China's been knee deep in this virus stuff. They had it first. They had the biggest impact of the virus first, and then it kind of went to Europe and then the United States and kind of the rest of the world. Notice that China's sales didn't really go down that much. And over a 6 month view, it's pretty flat actually, and I would even call this kind of flat when you consider how large these numbers are. So and I know Apple had like their stores closed in China for a period of time over the last few months. So not bad. If this is a preview of what can happen in the North America market over the next quarter or two, I don't think a whole lot to worry about. Whether or not that materializes, I don't know. As we see here, the North American market is by far the largest market. But you got Europe here. They obviously have been impacted as well. We actually saw sales increase over here. And we see Japan stay pretty steady. And we've got the rest of APAC here that's actually increasing. So the markets that are increasing, Europe, APAC, and everything else is staying relatively constant. That's a pretty good sign, based on the backdrop that we're kind of coming out of here. One of the, biggest, economic situations that we've ever seen with this virus. So in the end, total net sales almost dead flat on a 6 month basis, actually trending up nicely there. Now we've got product sales by category. So we have the iPhone. You can start dissecting, here's what the iPhone's doing. Here's what the Macintosh computers are doing, relatively flat over here. iPhone ticking up just a little bit. iPad, again, relatively flat as well. And the wearables, now you see a little bit of growth here. So this is the AirPods and the accessories like the little plugs and things like that. So this is trending up nicely. So you'd like to see Apple continue to innovate here, maybe push this up even higher. But notice, wow, this is even higher than the Macintosh computers and the iPad. So this category here, well, probably wasn't that big if you want to dig through 10 Qs and years prior. This is a category that's really grown nicely. And then obviously we have this service categories. This has really grown, and we're seeing really nice steady growth here. And then we again come down here to a total net sales number, which we saw up here as well. They're just breaking it out item by item here. Moving on to the balance sheet, we've got cash, money, and equivalents when we're talking about Apple here, baby. We got 40 billion here. This is 50 billion. Guys, that's close to $100 billion in cash. Boy, you could buy a lot of cheddar with that kind of money sitting in your bank account. Wouldn't you like this? Wouldn't you like to open up your Bank of America account and see these kind of numbers? in your account. Sure would. I sure would. That's for sure. You certainly would rocket to near the top of the world's richest people list as well. You'd probably need a yacht and a private island as well. But we've got accounts receivable. We'll see. Again, we've got people not paying their rent. We've got businesses closing. We'll see how well this number performs. But in comparison to here and here, it's not that bad. It's not a big number. There might be other companies that you look at, like mortgage people, like mall operators. This accounts receivable might be a much larger number, and it might be in much greater doubt because people aren't, businesses in particular aren't paying bills because they're not open and they don't have any money. So inventory staying in check. Other things, here we go. Total current assets actually ticked down a little bit. As we saw here, it looks like cash kind of left the company a little bit. We've got a $2 billion increase here, but we got about an $8 billion decline here. So cash kind of left the company a little bit, but overall, that's current assets. The other thing you need to keep in mind is we've got these non-current assets down here. We've got these marketable securities. So this is almost like cash. It's not, they haven't matured yet, and they're probably, I don't know what the true definition is, probably 12 months out or longer. So this is another 100 billion. So when you talk about how much cash Apple has on the bank, they have this, but they also have this as well, this very large number. So that's very nice to see. We got property, plant, and equipment stayed relatively, in check, and other boy, wouldn't you love to look at your bank statement and see $42 billion of other non-current assets? I don't know exactly what that is right there. It's not letting me highlight it, but boy, I would love to have $42 billion of other liabilities and other shareholders equity. So we come down to the liability side. So again, we've got a total assets here of 320, and then again, it trended down a little bit. You wouldn't want to see this continue for a very long period of time, but certainly under the conditions we're in, totally understandable. We've got current liabilities, we got some payables, we got some deferred revenue, some commercial papers, some bills that they've got to pay. Here's some debt that's due probably very soon. Tick down, so not too big of a deal there. We got more term debt here. I had somebody ask on the channel a little while back, hey, well, Apple's got all this debt. They've got 10 billion current, they've got 90, they got 90 here sitting kind of in a longer term debt. And they've also got this other 56 billion. If you add all this up, this is not an insignificant amount of money. But again, this is a company that generates tremendous amount of cash flow. They have high margins on everything that they're selling. They have a large cash balance. If they wanted to tap the debt markets, if they wanted to tap the equity markets, they certainly could meet obligations that way. So not going to bother investors really one bit at all. We've got a total liability number trending down just a little bit, but we've got 320 in assets balanced off by about 242 in liabilities. Not too bad at all. We've got a shareholder equity here, and let's move on to, here we go. We got cash flow, baby. Kevin O'Leary loves how that cash flows. Notice that they put it through a 6-month period here. They didn't give you the 3-month time frame. We're just looking at it from a 6-month view here. We've got a tick up in net income. We've got some share-based compensation here. We've got some depreciation. This all moves through the business. We've got some accounts payable that left the company. We've got inventories. We've got accounts receivables. Here's our cash generated by the company operating their business. This is why you really don't have to worry too much about the debt levels where they're at, is because when you're generating this much cash through your operating, and this is for 6 months. That's, a lot of companies will do this, will never do this, let alone over 6 months. So this is very, very impressive, and we'll just have banks lining up to trying to lend you money. Investing activities, nothing really sexy here, so to speak. We've got them purchasing marketable securities, them selling them. This is, when you have hundreds of billions of dollars in cash, you're kind of moving it in and out of accounts and things like that, in and out of securities, and that's what we're seeing here. essentially flat for the quarter, down a little bit from here. They look like maybe they were trying to get a little cash on the balance sheet here. Here they're, just tying it up in marketable securities and things like that. More financing activities here. We've got here's our stock buyback. You want to know how much stock they bought back? Look how much they did last 6-month period. Look, they're keeping it up again. Boy, oh boy, that is going to keep a support level underneath this stock. What it also does is Apple actually pays a dividend. So by buying and retiring these shares, it actually has a twofold thing. It lifts this EPS number that we saw up here. This EPS number actually goes up even when net income kind of goes down. That's because I think this is the denominator. You're dividing this number by this number to get to this number. You're getting a higher number here because they're retiring shares as they're buying back. The other thing, they pay a dividend per share. And so what that does is now they don't have to pay a dividend on these shares. So it kind of has a twofold, increase. It helps reduce the number of shares out there. That might, increase the share price, but it also, keeps them from having to pay a dividend on these shares as well, which is kind of nice. So repayments of term debt. So you're seeing the very, very manageable, very, very manageable in terms of debt. So this is a company that generates billions of dollars and they only have to, stick out $5 billion. This is like their mortgage. So it's very, very affordable based on how much money they're making. Here we got here's the dividend line. So here's what they paid in dividend. Notice again, this is a company that didn't lower their dividend, but they actually paid less in dividends for the 6 month because, again, they're retiring these shares, and so they actually have to pay out less to shareholders in terms of a dividend per share. Interesting note when you're coming to buybacks. So coming through the rest of it, we kind of give a cash and cash equivalents when we come to the end of period. Again, this is not a full picture of what they have because they have those marketable securities, both current and non-current. So this number is actually much larger, but this is basically like, you can almost think of like this is cash like laying on the ground and the other stuff's in the bank. So wouldn't you like to have $43 billion of cash just laying on the ground? I certainly would do like snowmen or, jump up and down, make it rain, those kind of things if I had that kind of cash laying around. Cash paid for income taxes. Whoo, man. I bet the Washington, D.C. Politicians love when that check comes in. And here's cash paid for interest. This is, in terms of financing activities and things like that. Likely this is kind of supplemental down here. So, hey, look, I'm at the end of the page. That's it, guys. So went through it really quick. Bottom line is Apple's business super steady despite it being a mature company, despite the coronavirus, despite all the stuff we're seeing. Very steady company. These services, revenues, and margins look very succulent and beautiful. So I'd be really excited about that. For Apple, for me, it's like, what's next for these guys? What's the next product? What's the next service? What's the next revenue driver? As long as that's in the pipeline, as long as that's coming down the road, this should be a very, good performing stock now and into the future. Full disclosure, I own shares of Apple Incorporated. Do your own research as much as possible. Hopefully this helped you. Hit the subscribe button, hit that like button, leave me a comment. Talk to you guys soon.